So in reality, it's like I work basically my work, and when I open setups, I base trade on to understand and to build anatomy of a trading range. So to understand what's going inside of equilibrium. Equilibrium, it's when the price finds the trading range, and where it's called also the fair price. And the trading range is something which is for institutions, something which will bring them big attention to watch the trading range, because they can do a lot of what I previously said, currency fixes or stop loss hunting inside the trading range, and later on they usually go out of equilibrium and we have the strong moment. So basically, after the trading ranges, it can be a diagonal and horizontal. Usually they're horizontal, but it can be also diagonal trading range. And after that, after they take in enough stop loss orders by millions of traders, then they decide to do their work and continue with their investing. After they took them all, the most of them, they're now ready to go and continue with their investing they plan. In the reality, in the Forex market, for example, I will speak about my recent British Pound USD setup. I also posted on my YouTube channel and my Forex Factory thread. In the reality, this is what's going on. So we have the trading range. So we have the trading range here, and as you can see, everyone can see the trading range, if I'm right, yeah? So it's not hard to see the trading range. But how to play the trading range? It's very crucial. How to play the trading range is very crucial, because you learn and you used to work like 90% of the websites are suggesting sell the highs, buy the lows, watch the breakouts and then trade the breakouts and so on and so on, and it makes sense. Yeah, and everyone see, yeah, this makes sense. We sell the highs, we want to profit as much we want. We buy the lows, and we also watch for the breakouts, because there is a type of traders which are breakout traders. And when something breaks the strong support, it should go lower. If something breaks strong resistance, it should go higher, and makes sense. Yeah, but in reality, the truth is actually just few percentage of the traders know how to play around this, and these are professionals, including myself, because to understand the anatomy of the trading range and how to play that, and how to trade, and how to project the profits and how to manage position, it's not easy job. So don't think that Forex is just you place the support resistance and you finish it, you buy on the retest or stuff like that. In reality, this is much complex. It's not just like that easy, and I will just go you very slowly to show you what I meant by stop loss hunting and why it's very hard to play if you don't have proper knowledge. First of all, everyone saw this trading range here defined, so don't watch the right side, watch just this area here, and everything is fine. But you try to sell the lows to this area, and people trying to sell lows, and then the psychology by 90% of the retails and the public is to play stop loss once they sold above the swing high, or few pips above, or 10 pips above. This, for example, spikes. This is a fix. This is classic fix, currency fix by some medium bank. This is not even, because this is a not big movement in terms of pips, but some of the medium, not big, not largest banks, but some mid banks, let's say in capital, they saw many stop loss orders. They saw the pending orders by public, above this. So not just that you have sell orders from the sellers here who sold at this stage and started to sell here, you also have the pending buy orders few pips above the swing high here. So what's the benefit of the banks and why they're doing this? They don't want you to take their money, you know. Imagine if everyone earned, you know, and you know, let's say that 90% of the people are earning of traders, it will be collapse. How they will pay you all the money and withdrawals and everything? It's impossible. Basically, it's something which you give them the real money and you have virtual money on the platform. It's reality in the economy in the 21st century, because basically 80% of the money it's not covered by real money. It's all virtual, you know, and you don't have actually that physically. So basically, they don't have any benefit if everyone are profitable, you know. If 100% of people are profitable, of traders, then it will be collapse, you know. They must pay you this, you know, from their pocket. So it's in reality is like, as I told you, this is fixed on the intrabias. It's called a fix. And again, why it's doing that is because stop loss orders from sellers who got technique and trade based on the sell near the highs, and they selling here, trying, you know, to find, for example, this support and take this profit, because everyone spotted trading range. It's so obvious, yeah. And I will tell you that it's something which is so obvious. It's like 90% of the time it's wrong, because it's so obvious, you know. And public also see that, and you know. So basically, sellers who sold here, stop loss, they put a few pips above the swing high at that stage, so they put here stop loss, and also a lot of pending orders buying above the swing high are waiting there. So basically, with this fix and back up lower, they hit the stop loss by sellers, and they hit pending orders by buyers, and also close them because they've also put the stop loss usually below the swing highs. I mean, about the pending orders. So they did the two things in the same way. They clean up basically the stop loss orders by sellers, and they fill up the pending buying orders, and also later on very easily in a 1 hour closed as well these positions. Again, why they're doing that is because they don't have any benefit and they don't have reason why to do not that, you know. They don't like them that you take their money, you know. Again, the logic is very simple. If you have millions of pending orders here, buy pending orders, buy stops above here, and you have a lot of stop loss orders near this area, they will just clean everyone. And how they clean? It's a very simple. Upward to clean stop loss, and force the buy pending orders, fill the pending orders, and then close them. And this reaction, it's a very, very fast. So don't think, because I see that people say, oh my God, why? How they know where is my stop loss and so on and so on. Yeah, they know. And if you have stop loss like 90% of the public, and if you don't have timing and proper knowledge, you will be like 90% of the traders. You will be non-profitable. That's how they know. And if you think like public, if you think on that way, you will not be profitable, because public generally they're not profitable. You know, they have from time to time good setups. That's okay. I didn't say that, but consistency, they are non-profitable at all. You know, they don't understand the market, and they just play around something which they read from something. You know, they read and they stick to that and so on. And I told you, this is a not game. This is a not for fun or some game. This is a very, very serious business with millions, billions, trillions in this financial market. And let's go another. I will take another example of cleanup. This is another fix the next day. It's the same way. You must understand, everyone see the trading range. You know, there is a, even if you read you are new and read some on the internet, you know, you start to trade and you say, you understand, you know, you see this is a resistance, you see this is support. But is there anyone who will explain you how and what's actually market manipulation in reality? No. Will everyone tell you the real truth? No. Because they don't want to tell you. You know, why they will tell you what's the background and reasons behind this, you know? So, for example, look at this. You see everyone is buying here. Again, the same logic. Buy the lows. They add positions here, price going lower. Now, there is a lot of sell pending orders. Price fill sell orders, hit the stop loss of the buyers at this stage, and then say bye-bye to everyone. You know, again, fix. This is a currency fix, you know. So another millions and millions in their pocket. You must understand that. It's not because you know, fruits, or it's not because the God said that. It's because that's the way how they take the crowd off. That's how they play with crowd and public, and that's the way how they earn. And you must be you must have very big knowledge and understand the market to be able to ride and read that and ride with them. You want to ride with them, not to trade versus them or fight versus them. You want to try always to ride with them. Okay? And not just this is a fix up. I will show you millions of the fix ups, you know, day by day, basically. So, yeah, Tsunami, yeah, it's okay. You joined it late, yeah. Just pay attention and watch. You will understand. Anyway, let's back here and see another fix. Another fix up. It's basically once we establish it, this swing high, I will write you here. Then it's the same way. It's the same way. I'm speaking about strategy I'm using, basically the professional way of looking together with Wyckoff analysis and volume analysis and price action, pure price action. And I speak about basically about how the banks take the money from the public and the crowd who don't have knowledge and don't understand the market and what's the fix on the market. It's recording Tsunami, and you can watch later on. I will upload. So now let's continue with this. So we have a one fix here, big millions taken by banks. Another fix, clean fix. You can see that. And then look at these cleanups right now. I will show you. So you have the swing high here, and you have a lot of pending orders by public above this swing high. And they say, oh my God, okay, this is a final dat. And that's how they think. They clean up here, they clean up here, a lot of two fake breakouts. This must be that price go higher, because how it's possible that even third or fourth time they can do the fix and stuff like that. And look at what happened. Buy orders. Now price retested this swing high zone, and everyone knows this. Am I right? The retesting of the resistance is also buying opportunity. They continue to buy here. Short-term traders buying here. Then price, you have this swing highs here. Price actually they add buy here. Price react here. They add buy here. And look at the cleanup. Very, very fast cleanup. What we also created, we created a pattern on that way. Meanwhile, it's head and shoulders here. And finally, price back into the trading range. At this stage, once we saw this formation, this Wyckoff call, this is a uptrust. This is an uptrust after distribution. UTAD. It's a complex way, it's anatomy of the trading range, and this is something which you need to know. I will just go through the basic things in this webinar, but you will understand the point, you know. So we got one cleanup here, second cleanup here, few cleanups here, here, and here, and you know, this is all in this trading range. They take all your money. Basically, what you need to focus on, and you will see, I will erase right now this one, everything, and take this, okay, and I will gather this and this and explain you the reasons for my entry and how I knew in the percentage I got, why my percentage here is very big in these selling positions here. Basically, I sold after the breakout, after a lot of cleanups, after the head and shoulders formation on the top. Aggressive sellers started to sell back in here into the trading range. This is a little aggressive entry, but Wyckoff and his research, Richard Wyckoff, is one of the most successful investors in the history. Basically, he focused on the trading range mostly, and he preferred to enter after the all cleanups, and price clearly show their way, which is very clean through the range. Very cleanly, price went to the trading range very easily, back, retested, and this is the retest, or this is the area where you want to build positions here, where I basically sold. Why here? I'm right now in plus about, I don't know, about 50-60 pips. I'm aiming about 300 pips or more, because this projection, and I'm teaching that students of my mentorship program, projections of this base, it's about a few hundred pips, and I have a lot of room to this. Of course, there is a swing low and so on. We need to break on. We will see later on, but basically these bases have a very solid length of 4 or 5 days, and projection is a very, very good for profit. So how I avoided, for example, how I avoided the spikes here and these fix-ups, this fix. Basically, you must understand the overall larger picture and watch the daily bars as well to see, because daily bars are something which are very, very important in the trading. Basically, if you wonder why I didn't sold here at this stage, the answer is very simple. I will mark you up this bar and go to the daily and see. I never go in setup before the daily close. That's one of the things, it's a small trick, but I want to see the daily close. And if I go to the daily time frame and see that day bar when they closed, tell me, guys, where this bar closed. Go and write in chat. What does this bar represent? So I speak about this bar I marked. This is the bar where we got a fix or fake breakout of the trading range. This is a daily bar, how it looks like to you. Is it bearish? Is it bullish? Or what is? Write in the chat. Write in the chat if you what type of this bar is. Anyone? Okay. So this is a classic strength appear here. This is a strength because we got a breakout of the lows, then price back up here into the middle of trading range. This is actually a slightly upward bar, slightly bullish bar, and with strength here on the lows, and price went higher. And how you avoid it, basically, it's a fake breakout, and then price went higher, out of the trading range, and look at the close of the bar. It's in the middle. Market closing something in the middle is still not. Yeah, it's a 50-50 bar. Yeah, but the point is it's neutral, slightly upward. It closes slightly in plus from the opening, but it's confirmed a fake breakout of these lows. That's exactly this bar. Yeah. So, and how you avoided this trading entry, for example, if you watch the 30 minutes and public got a lot of, and this fix, how you avoid this fix is basically you just need to be patient and watch overall picture and how the daily closes are finishing. Okay, so this bar didn't finish it. You see the fake breakout on the 30 minutes, but if you watch the daily time frame before you build positions, you're not faking. You don't do anything. You still wait. Then you have this bar. This bar finish in the middle. Still not good at all for buyers. And then strong supply bar. And this is something very good. It's also bearish engulfing back into the trading range. And finally, this bar closing here. And at 30 minutes, you can see clear retest as well of the trading range. So this is what's going on. You know, this is how you read this. And now, my first thing I said on the presentation is basically watch the overall picture. Overall picture, everyone can see, is strong downward on the long-term perspective. No doubt about that. This is a strong downward moment. And we went strong downward, and then we went to correction. Basically, we went to 50% retracement there. And then midterm traders and long-term traders started to resell their positions. And we got another head and shoulders formation, which is the strongest formation if we see the topping form, one of the strongest topping formation on the Forex and on the stock as well. And you have the, I will take the pen, you have the head here, left, right shoulder, neckline, breakout, retest of the neckline. These are also very good opportunities to sell, because this is also was a small trading range here. And again, you got the area to this swing low. And then price went. And what we create lower swing highs. It's a classic way to look price action trend. And it's confirming the downward continuation by smart money, by big boys. So if we know that we are in the strong downward trend, don't think about any buying. So basically, I will watch only for good selling opportunities when they appear. Once I saw the daily, it's very, very strongly in the downward favor. I will not prefer to buy anything because there is a much less chance, even if everything is good, you know, and you see everything is beautiful, because of the strong downward trend in the background by big boys and institutions, I will not prefer to buy. And not even try to catch the lows and be the guy who will catch the very, very low and the start of the new trend. I don't need to do that, basically. And any professional, in the professional world, you don't need to do this. You know, why should you? It's very simple. In the professional way, it's. Can you hear me? You can hear me? Okay, so in the professional way, you don't need to be, let's say, with quotes, like smartest trader and try to, because I will explain. You have the downward trend, and and you want to be that guy who will catch that very bottoming and then you buy. But why you need to, why actually you need to do that and risk to trade versus the big boys? It doesn't matter how it looks like. It's a very, very bad. You can always trade with the big boys, and what's the professional way of looking is you have the downward trend, and then you see for example, some consolidation, and then you see the strong upward moment, and again establishing the buying trend. And I will buy after we confirm the bottom. I will not try to pick the bottom because it's too risky for any serious professional trading. So I mean, that's the point. You don't need to fight with big boys. You want to try to ride with them. Okay, so you want to try. You never try to catch tops and bottoms, especially in intraday trading, because it's you like playing with fire. You don't need to do that. So I will erase here and now take the point here. So basically, we have the background downward trend. We have the head and shoulders confirmed in the day on the daily time frame. We saw the trading range here and good short-term opportunity to try to sell and see how this will perform and how we can benefit. Basically, my original stop loss is about 100 pips in this, and I'm going for at least 1-to-3 ratio in every setup. That's my very, very minimum to go for 1-3 ratio. If I see that there is no space for 1-3 ratio, I will not pick basically any position. Mali, I don't think so that everyone knows this, because if everyone knows this, everyone will be profitable and will be consistent over the years. So it's like 99% of traders don't know about what's the daily fix, and how that perform on the reality, and what's about the volume analysis. I speak just about the anatomy of the trading range basically right now. So it's just one part of the way to look, just the trading range anatomy. I'm not even speaking about the volume implement there, which you have the climatic actions and for example the volume spikes, like for example where the pound stopped. It stopped on the massive selling climax volume spike here. After the volume spike, buyers try to recover, and they're trying to buying. They think exactly that they are, they're the guys who will change the trend and so on and so on. They try, then they find a fair price, and then big boys play with them in the trading range, take the few fixes here, take the stop loss orders, and then they recontinue. And they can still take the stop losses on the daily BS, and on that way slowly, steady, go lower and lower. That's how they trade. The volume and watching the volume together with that, it's extremely important to understand. Climatic actions are something which very, very small percentage of the traders recognize and even use the volume. On the Forex, we got a tick volume. On the stock, we got centralized volume, numbers of the share traded per day. Here, this is a tick volume. And if you see like spread of the bar, like 100 pips, like here, and the massive volume, you must know that this is probably an area where a lot of sellers, professionals, exited. And that's why they let the room for the buyers, for the weak holders, to buy, and they let them until they say, okay, now it's the time that we don't let any more there. We will do the trading range, and the crowd will still buying because they think that's it. This is the bottoming of the pound, and then finally, after the stop loss hunting during the trading range in a few days, they recontinue with their selling because they will not stop. Just like that, they're in big investing. When I say them, I mean on the big banks and big boys. So to stop them, you need to see the big trading range, something big, about 3, 4, 5 weeks trading range. You need some big bottoming pattern, and that means that most of investors exit and now they watch to try to build and change, let's call that way, trend. But to change the trend just with the one bar and spike down, it's like very, very rare, to change the whole global trend. This is just temporarily exiting by sellers. They exit positions here. They let the the crowd to buy, and they make them to think that we are right now starting to be bullish, you know, and then they just recontinue very, very easily. So this is about the pound. I'm expecting about the pound. My target is about 300 pips. I posted this on Forex Factory, and I'm expecting basically 1-3 ratio. So I'm going for around 300 pips here. This is also demand from this stage here, and the next target, if you have the 2 transactions or you want to go for lower one, the good placement will be around 1.4 640, which will be about 500 pips away from entry, the original entry level on the short-term perspective. So risking about 100 pips, going for minimum 300 to 500. This is the good deal, and this is what you always aim. You need to have the good timing, or you will just fake it out by the big boys and the banks. So, so this is about the British pound. I'm really expecting retesting of the lows in the next midterm. If we speak about the midterm perspective, I'm expecting retest of this swing low, and later on probably go much, much lower. For example, to next year, pound can be a much lower. Now we'll go to Euro New Zealand dollar, because this pair got a lot of trading ranges on the daily PS and big trading ranges. One of the massive trading ranges actually happened in this stage here, and this is the where also I took some positions with my investors. If we speak about the midterm setups, this is the area where it's massively good to build selling positions. Again, everything starting with the buying climax. You know, it's a classic topping. This day I remember I took about 700 pips, risking approx 100 when this day happened. Why? Because I got previously buying positions from this reaccumulation at this stage here, and this is just profit. It went 1,800, but I took about 700 pips basically, and I closed about this stage here. I remember it was a very fast. I took 1/7 ratio, and I was fine with that. And later on, price spiked very, very strong. And why it's priced again? Classic. You can see that on the every financial market, every currency is the same way. You know, same psychology. You know, you see the massive where the bar closed. Look at the range of the bar. It's a massive volume spike. This is a buying climax. It's a classic first potential topping. It's a buying climax. Now price close in the middle. This is a big weakness in this bar, but it's not so easy that you immediately sell and think that this will back all the way. Of course, as I told you, they like to see the equilibrium first, the trading range, and this is the big trading range, and this is approx about 20. This is a 1 month trading range exactly. 1 month trading range. I will tell you that this pair, when I saw this breakout of this, when they took buyers from this stage here, the fix here, and then finally they started to build, we'll take the pen again, build the lower swing highs, lower swing highs. This is exactly time where they established their investing, you know, and then we went lower, we broke this bar. It's not so bad at all, very decent bar, and then you just sell according to 30 minutes, or you can use daily time frame. You can put stop loss above this bar, which is the last point of supply. It's called a Wyckoff analysis, and if I mark this is a buying climax, this is a support or ice it's called, and then you have the uptrust and uptrust after distribution, and then strong upward. This is a last point of supply. Last point of supply. And when you have last point of supply, you have broken trading range finally after 30 days and retest, and this is the where you sell. You go approx 1-3 ratio or much more, because this projection of this base, it's more than 1,000 pips, really about few thousand pips. This is not about few hundred, this is about few thousand pips. And what they will do, this is the exit of the equilibrium, again lower swing highs, continuation, and still this is all the way lower swing highs, you know. And this trading range is again about to it can go to correction and again continue much lower, few hundred pips, you know. Why? Because we clearly, this is a distribution. So distribution by smart money, you know. It took them 30 days to clean a lot of traders. If I go day by day and show you how many fixes, how many cleanups and stop loss hunting you got in this trading range on the daily, you will be amazed. Basically, it's almost every second day or almost every day you have the cleanup, you know. And if you don't know and understand, you will be very, 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 you will lose a lot of money. Why? Because you don't have a clue what's going on, you don't have a proper knowledge, you don't have patience, and you don't know what is most important in the market, and what is the best timing to enter, you know. And with all of this, also managing position, proper risk control, knowing where to place stop loss, knowing where your profit target zones, waiting also targets, don't be impatient and close very early. All this, it's absolutely make you to lose money. There is a million of things, and if you don't know, you will just be in bad situation. Theo, what is the difference between distribution and reaccumulation? Distribution, it's first of all everything starting in the similar way. The first half of the trading range is usually the same, but you must watch the volume, you must watch the price action in the anatomy of the trading range, and that's what's the most important. And first of all, when you see the buying climax, and in this example 1,000, 2,000 pips bar finishing in the middle with good weakness, you know, you don't even think about buying. So you know that this is a very, very this is no way this will be the reaccumulation. Just with this bar, you know that smart money started to sell. Then we got to the fair price and equilibrium. Now you need to just right time to sell. You don't even think to buy. In this example, you must know to recognize the starting of the trading range, the anatomy inside of the trading range, and what's going on, you know. So, but again, I have the mentorship program, and I teach absolutely everything in 7 days course, step by step, to understand exactly how to trade and what's going on in the market. Again, it's not easy. Don't think it's about you have support resistance, that's it. You know, it's like the first grade, you know, in the school, you know, in the basic school. You know, the people, the way the most of traders trade, it's very basic. You know, basic is like that, you know, to sum in the mathematics, that one operation, you know, and a lot of millions things in the mathematics you don't know, and you say you good you know good mathematics. No, you know some basic things, but to trade with money, with real money, or according to the base things, you know, it's like, you know, driving a car without wheel and pedals. You know, it's basically like that. You know. So traders are usually I'll erase this. Do you have a course we can go to learn all of it? I have my private course. I'm teaching you privately, mentorship one-on-one. So I'm totally work with you. We work usually 4 or 5 hours per day, 7 days. I go step by step, showing you, send you also some resources, material, and after program I'm here in touch with you, and we trade together, and I watch your progress, how you practice, and so on and so on. This is a not play, guys, and crowd people, public, usually don't want to take this very seriously, go much deeper inside and learn what's the most important thing here. If once you understand how you earn my profits, no. I have mentorship program course. I have the price for that mentorship program. You finish that program, I teach you the way to look and understand the market. Later on, I follow your progress. You can ask me anytime on the Skype if you have, while you're practicing that knowledge you learn from me. So you need the practice. It's not like I teach to you, you will immediately know everything to spot with your eyes. Basically, you need to practice and practice and practice, which make you the better trader, and you go professional way. So again, let's back to this anatomy of the trading range. Anatomy of the trading range is again very important. Trading range is where the investors and traders are in equilibrium, you know, and then on that way they will take many stop loss orders. You know, basically in this trading range the banks benefit the mostly, and then once they benefited and they want to start their work, they started here, which is the massive selling. They massively sold from this stage here, and then made a fair price to public, and they made a more. That's what I told you. So you will not see like price go higher, go and change the trend like this. Usually, it will be like something like this: buying climax and then price back lower, and then create some trading range here, make them all lose the money, and then they continue, you know, and professionals benefit from this stage here, you know, and then they start again, same thing. And this is a redistribution. If let's say this is a first distribution main, this is a redistribution, and once they took their money, again professionals benefit from this stage here, and you take most of the par, which is actually you're out of the untradable trading range by professionals. Basically, this trading range is designed and created by banks. It's the easiest way to keep the traders in the same range. Don't let him go up and down. Define the trading range. This is defined by banks, by the way. Don't think that the trading ranges are not defined by banks. So they define some levels. They will not let buyers and sellers, the public, out of that. And they will keep them as much they want. I will tell you that. So they can keep them 2 months. They can keep them 1 month. They can keep them 1 week. They can keep them few days or few months. On the stock market, they can keep them even 1 year. You know, but here is a less time. So in this example, 30 days. 30 days. In this example, they took big money. Once they took big money, they let the professionals in. They sold for themselves as well. They continued to sell. Basically, they started here, and they continued to sell here. Probably they continued to sell here. This is a redistribution, first redistribution after major one. You have the lower swing highs, confirmation of the strength, you know. So I'm expecting much lower price on euro dollar, for example. You can use the moving average. This is all additional. This is a 50 moving average, also change behavior, and this is a 10-day in this real line. So, but here, look at this. Here, look at the trading range. Look at this swing high. Look at the breakout. It's a fake one, you know. Look at this breakout. Just a little few pips above this. It's a fake one, you know. And then price lower. And now, after they faked them 2 times, it's fine for them, you know. Probably they you can see even the price back into the trading range in the middle, or to test 50-60 retracement and then back. It's also normal. So you need to put the stop loss all the way above to avoid even this potential hunting by them. So always place a stop loss to be the safest place, so you don't need to worry about if they want to do this or not, because you have a lot of potential profits to log there. You don't need to worry, even if you put 200 pips risk. The projection of this base, it's basically about 800-900 pips. you know, so you can easily take 1-4 if everything go like you plan. You can secure after you watch the price action, after 1-1 reward ratio, or after the price action confirmed it. It's safe to play stop loss and break even. Okay, so you must again understand and under the background and trade with that. You don't want to trade the corrections like this. It's when price go like correction like this, it's or just like this, you know, just straight upward. It's a very risky because corrections can be, you don't want to try to pick up exactly end of the corrections, you know. Basically you want to find a trading range, define trading range by banks, and then watch very closely that. I have like monitoring here. I have a few monitors here in my room, like 4 or 5 monitors, big monitors, and then when I see trading range, I very closely follow this day by day, also the lower frames, to see that, to understand the anatomy of every trading range. You know, I also use the point and figure chart, which I will not explain you here. It's a totally new way to project the base, the profit, potential profit from the base, how much price can go. For example, from base, every base have a different length, different range number in the pips, and different length and different anatomy of the volume. So all of this make the projection using the pointed figure, which is the very best. And there is a technique again. Most of the trading range anatomy, it's by Richard Wyckoff. And I also have my influence of my own experience as well. So together, it makes a very, very powerful way to earn and and create very good success. Not just in Forex, basically, I mean on every financial market. It's just pure gold. If you're on the ground, if you understand the market behavior, again, you are like millions. You're in advantage over the public retail trader, like big. You know, so your advantage to understand the trading anatomy and to trigger exactly, to have the perfect timing is something which make you professional. Just few percentage of the traders will know how to trade and avoid the fake breakouts and the stop loss hunting, and popularly called the fix, which I show in my presentation. Because fix, again, for the new attendees, welcome Santi, welcome BBC. For the new attendees, we speak about the anatomy of the trading range and about my way of trading and my successful way of trading. And about the volume aspect, about the climatic actions as well, and so on. So fix, again, for the new attendees, since I see the few new attendees, fix is something where how the banks and big boys take the money from public and crowd. It's usually after the banks define the trading range, and then when people think and everything is obvious and people try to buy on the breakouts or sell near the highs, they sell here, price close them, and then the pending orders filled here and close them as well. Now again, sellers start to sell this, pending orders fill here, and then price went. They have a double benefit from just one thing. You know. Again, for the new attendees, we just raise. How they do is these swing highs are defined here. There is sellers who sold here, you know, and now sellers got stop loss when we broke the swing highs. Pending orders buying filled here after the breakout of this swing high, and they close them as well. Then the next time they do the same thing, you know, and then we start again to establish lower swing highs, and that's a sign that they are happy. Investors are happy with lower price and they want to finally go out of trading range which we happened with this bar, and then we got lower, and then again trading range, and potentially again going downward. Okay, and I want to show you another example where I took about 700 pips. I have these selling positions as well with some investors here with midterm investing. I will erase this, take this, go here, and show you this, how they play with you, with the crowd. So you have the trading range established here, and then you have here trading range, and also here you can push all the way to this stage here. So watch this. Trading range defined, tight close is here. This is called tight close flag. Out of the tight close flag, sellers here got stop loss, and pending orders here activated, and then it took them stop loss here. You know, now we got the new swing high. Price went to that, retested, played that, and then finally quality breakout of this trading range, which make this right now catch. You can buy here. The plot should be below this bar as well, where the buy start to go upward. You can play on the retest as well of that area, and look at the profit here. I profited here about 700 pips, but price went about almost 2,000 pips here, and clean everyone out. As you see this selling, there's some big sellers here who are trying to sell here because they think they can catch, they will be the first one who catch the change in the trend, since that way trend was clearly bullish. And people are trying to catch, to be the ones who, you know, who change the trend and stuff like that, but the big boys. And define trading range, out of the trading range, it's just make them all stop loss with this bar. And people who didn't have stop loss, this is a bye-bye, and this is a margin call for them with this 2,000 pips bullish in one day. That's how they trade. They absolutely have answer for everything. If you think that if you don't have a place stop loss and you are safe, even if you sell here, you hope sometimes in the future will go lower than this. You sell here and you think, I'm safe, I don't have stop loss. It cannot go like, you know, 5,000 pips. It's impossible. And look this. In a few days, bye-bye. In a one day, 2,000 pips. Stop loss, margin call, so on and so on. That's how they take care of these people who think that they can trade without stop loss and try to beat the market, to outsmart the market, which is very wrong. You never want to try to outsmart market or beat the market. You actually want to ride with them and try to ride with big boys in every setup and understand the anatomy of the price action and trading range. And this is also called equilibrium. You know, after every equilibrium, you don't want to be into the equilibrium in the position where they can hunt you. You want to be on the safest. Your timing must be very good. Timing in the financial world is the most important thing. Okay? Timing. You know, if you don't have timing, you will be a very, very bad situation. Okay? I'll take again. And here, what I spoke again, very, very strong distribution. Double up trust here. They hunted the stop loss. And imagine this. Average retail trader will trade day by day, and he will fight versus the fixes, versus the stop loss hunt orders, versus a lot of things. He will fight in the 30 days. Okay. Smart trader will weigh this, mark this. We already know we got massive buying climax. We don't want to even think about buying, so we want a clear selling and good timing to sell. You know, while they're fighting day by day, we're waiting this. We have a lot of currency pairs to trade on until, meanwhile, we're waiting this. And then when you got, finally you can set up alert, for example, and then once it's broken, you watch to see the behaving of the breakout. This is a quite okay breakout. it's not, there is no big sign of strength here in this bar, and this is the retest. It's a lower swing high, and you start to sell from this stage here. Also, as I told you, you starting to buy in this stage here, and this is the retest of this one. You can add buy here, benefit from this, sell here, benefit from this, another sell can be exactly where we are right now. That's why I took this basically example, because this will be very protected. Even if it's not protected, they will maybe do the fake breakout, think that this will go upward, and then they will just maybe go to 50%, 38.2, and then continue much lower, like 500 pips, 1,000 pips lower from this trading range. Still, major topping form is active, and from this topping form, I think in the next years, this will be the top of the tops. You know, we will not find larger price, and this will just drop in the next years. That's my opinion. They did this on purpose. 30 days base, it's very strong base, especially on this massive buying climax. This is something which can turn this pair to years, to be in the next years bearish. So if you have any questions, just let me know. Again, I will try to answer any question if you have any question according to the. Basically, again, I will go to the points you need. This is a not game. This is a serious business. You need to have the serious knowledge and understand the market behavior, and to understand and how to read properly the market. You want to ride with big boys. You don't want to fight with them, or you don't want to try to pick up tops and bottoms. That is the very, very major mistake by unknowledgeable traders and unexperienced traders. Then you need to understand the volume and the importance of the volume, and to understand and how you read actually what's the climatic actions, what's the other things if we speak about the volume aspect. Then you need to know exactly Wyckoff anatomy of the trading range, and to look much inside and deeper, and to know how to trade. You need to also position yourself to have the good timing, and then to manage that position properly. Even if you have all this knowledge and good timing, if you don't manage position properly, if you overextend risk or something like that, it's still very, very bad for you like trader, and you will not build good success with that. Okay. So again, how it looks like, I will write it here. It looks like this. Every trend is very rarely changed fast. To change the global daily trend or short midterm trend, let's say the midterm trend, you need a lot of work. The banks will not give opportunity to people just to earn like that. They will do many fake breakouts. They will do the, which I call the fix, and which is, you can search this in the Google, fix on the currencies. It's actually the well-known technique they used again to clean up stop losses. And again, for the new attendees, since I see how they clean, it's very simple. I will show you that also on the. I can show you that on my British pound setup. Okay, how they clean up. Let's go here. They clean up like this. We got the range here, and you have the two techniques. Public use two techniques: sell near the highs, sounds logic, you know, or to buy the breakout, buy the resistance after the breakout resistance, stuff like that. And look at this: sellers on the near the highs, they got the stop loss orders filled here because they put usually few pips or 10 pips above the swing highs. They fill here, and now because of the millions of the pending orders above these swing highs, they fill as well that. They fill buying, and then they clean up them as well. So with this move like this, they clean up sellers who sold, you know, who started to sell. So I will show you here. I have this and then like this move. What's this? Sellers who sold at this stage and who started to sell here got stop loss here. Pending buying orders filled here. Also got stop loss here, lower. So one stop loss here, one stop loss here. With this behavior by banks, they clean up pretty much most of the crowd and public. And they can do that on daily BS, they can do that on the mid-term, short, large-term frames. This is the one, this is the second one, same thing. This is the third one. New buyers came in, and they clean up pretty much buyers, the wave of these buyers, the wave of these buyers, the wave of these buyers, they clean with this spike all the way lower. Even the people put all the way lower to this one, they got clean up all the way. And this is behavior also, this is telling us that they're very, very, very bearish and they're ready to go downward, basically. So, you know, people are wondering again why they know the exactly stop loss and stuff. Because they know every time you put stop loss order or pending order, they have in database that if they have the millions, the stop loss orders and pending orders in the same area, so basically they can see, for example, in their, just a second, I will erase this. So let's say they have a lot of stop loss orders around this area and a lot of pending orders around this stage here. You know, they will, if they got here, they will try all the way to like this. Since they got here, they went all the way this. That was enough to clean as well then. And that's pretty much like that. Now, here, they got a lot of pending buying orders here and a lot of stop loss from these sellings here. They clean up here. You know, this was the first cleanup. The new buying orders here, clean up finally. And pretty much they cleaned everyone, just professionals. If you're a professional, you will just stay out of this. You know, potentially you can't trigger here aggressive selling. I spoke that yesterday on my webinar. This is an aggressive one, aggressive way. But I will not put a major position. If I risk 0.5, which is my normal risk, I will put like 0.2 if I want aggressive. When price back in the trading range after the head and shoulders formation here. And if I want the safest, then my major position will be established at this stage here, where I built as you see selling. Even in the price back potentially here and try to reach, if I see the price action is weak, I will still resell again because this will all be just correction. Okay, we have still lower swing highs, so I'm not afraid even if the price go all the way here at this stage. But we'll see. I don't expect. I think this is the end of ABCD correction, and just we will continue slowly and build lower. But never say never, and I'm prepared for both of cases. That's very important thing. And there is nothing which can stop you if you have knowledge. Okay, you just need to be on the ground, trade with strict money management rules. Don't overextend. Don't think that you know everything and that others don't know. But I think that even I have this knowledge, I will never put like 3% in setup in short term. It's too risky. My maximum will be 1% in position, and minimum I'm going to take profit is 3%. 1-3 ratio is minimum. 1-5 it's something which I like mostly, but 1-3 I'm still fine to take that. So if I risk 100 pips, I want to take 300 pips at least. Or otherwise, I don't like. If I see the projection of this base using the pointed figure chart, it's not good enough, and don't bring me the amount of pips to achieve the 1-3 ratio, I will not take this. It doesn't matter how base looks like and how the price action looks like. In this situation, this base it's worth more than 500 pips and it's whole, so it's a very, very worth position to wait. And that's pretty much that. About my mentorship program, guys, if you're interested, my mentorship program, Again, since I see there is a new attendees, I will just go again to the. So we finished with these examples. I hope you got the point. There is a much more here. This is a just basic things just to represent you to understand, but you must have the big knowledge about also looking the volume and price section inside and to create the good supply demand zones to know which one are good and many other things. These are just to represent you to understand. And then if you're interested to really learn everything and how to calculate the projections, the basis, and how to the professional way of Wyckoff analysis, to use the volume spread analysis together, to use the Fibonacci work, which we didn't cover. There is a conclusion areas, there is a multi-Fibonacci zones, and so on. So it's a not simple thing, but you can, if you want really professional, you must know this. Otherwise, you are a very bad situation, because you will be stuck with other millions of the stupid things and over the internet and things which are so unimportant in professional trading that you lose time trading that and you lose time and money. So you have the double bad things. My advice: start my mentorship program, 7-day course. I teach you day by day. You watch my screen. We speak through the Skype. You see on TeamViewer. We're going lesson by lesson, day by day, and we have 4 hours per day usually we're doing. And later on, I'm in touch with you all the way on the Skype after the program. Follow your progress of your practicing, and we doing together. Also, I have the room. I create a room for every new attendees, new students, and then we are touching in the group as well, day by day, spotting together opportunities, and that way you learn faster. Now I will erase all this. We'll back to the PowerPoint presentation. Just great informative. Yeah, thank you, Nix FX. I will just back here. PowerPoint presentation. Just to finish the. Just a second. I'm having the. Okay, PowerPoint presentation. So you see my presentation. Tell me if you see. You see. Okay. So this is my information again. Pardon. Here. Okay, this is my information. My Skype username is petar.jacimovic. Website is wyckoffanalysis.com. I'm expert analysis. I work for InstaForex. This is a 6th year. I'm their official analyst. You can watch my. I have my YouTube channel. I have the Forex Factory thread on forexfactory.com, largest forum in the world about the Forex. I'm a veteran member there. It's very good. Success. I have the training journal. You can see my work in the past 5-6 days. Every setup is posted before it happened. And of course, add me on the Skype. I'm free to teach you. Probably at the end of the year, I'm free. So later on, I have plans and so on. Maybe even I got some offers to work in the hedge fund, and so on and so on. So till end of the year, I'm totally free for the new students and to educate trader. You know. So add me on the Skype if you want. Just for the end, tell me if you have any question. Again, final. I will give you a few minutes. Just write question if you have. Feel free to write question, and then I can close the the presentation, the webinar. I hope you enjoyed, and I hope that we will do the cooperation in the next period. I see that there is no question, so I wish you a good day to all of you. Good trading, be smart, and trade safe. Bye-bye for now, and thank you for watching.